take us back to 2008, 2009 versus today. When you're talking about I was net short or you're positioning, how much harder or what tools were you using back then to make those decisions versus now? Because now, especially we actually had a meeting with a very large hedge fund, more so credit, the other day. But they're like, we need help with positioning, we need help with exposure. So even sophisticated funds today struggle with what their net exposure should be.
Every day.
And there are a lot more tools today. But back then, how are you sort of thinking about it? Was it more of a fundamental economic? Here's what I'm seeing. It's different what the market's seeing, or
important question. I mean, let's just start with every single day, the struggle is real. If you're trying to make in-game decisions on your gross long exposure, like how long are you with leverage or not, I typically don't use leverage because I don't need to, but to generate alpha. But or your net exposure, like how big is your hedge? Do you have, so your gross minus your gross exposure minus your shorts equals your net. Okay? So what is your net? Like, are you tightening up your net? Does that mean that you're hedging so that your portfolio is less long? Are you going net short? So that part of it, Jonesy, in 2008, I knew how to do because that's all I knew.
Yeah.
I knew how to trade a book. I go net short all the time. The primary tool I had back then that I still have today, while I was running net short, was one thing. It's called the bazooka, the quad 4.
Yeah.
Right? So I had, market, my economic quad model is saying the U.S. economy has to cycle these base effects. The incoming data is slowing, quad 4's coming, and this could be the most epic quad 4 in the history of quad 4s. So I'm going to stay net short on all rallies. But I'd go net long sometimes. Again, the thing about bear markets like '08 is that they bounce bigger than a bull market because the catalyst for something to go up is that it crashed. Okay, so again, that compared to today, the market structure of today is nothing remotely close to that.
Yeah.
But the economic cycle is still the quads.
Yeah.
So now we have a much more specific, again, it's easier for me to make money when nobody else is. '08. I turned in April of '09, you can look it up. Bought Starbucks at like $2. It's time-stamped. And then we wrote it for years. Again, just to keep the damn thing there to remind people that was doable. When people tell you in your life that you can't do something, the first thing I think, if it's something that I'm working on doing, I just start laughing in my head. Like, fuck you. Like, what do you know? Right? Like I tell my kid, he's 5'8", he's a vertically challenged defenseman. I'm like, if anybody tells you you can't play at the level you want to, fuck them. Right? Work harder. Get in the gym. Outwork everybody. Right? Don't let anybody tell you what you can do. Okay? And what we can do is save and make people money in environments like that. Always have been able to. We're undefeated essentially in quad 4s going back 18 years. Today, the dynamics of running long only money and or just understanding how to set up your hedges if you're a modern day hedge fund, if you don't understand the Tier 1 Alpha data, if you don't understand market structure and how the Tier 1 Alpha data can help you, I'm going to beat you. I know I'm going to beat you. I am beating you. So again, that's the whole point. And so is our community. So it's not just about me. It's people that are, again, rate-sensitive investors. All they do is income investors on the equity side, or they're just bond market people, fixed income. There's so many different ways to use the risk ranges to your advantage and understand that the tapestry of the market has changed entirely. So that's what we work on quite a bit with clients.
Yep.
I'd say half of a meeting in an hour-long meeting could be about this.
Yeah.